Welcome back to this very special edition of Indianomics with Professor Raghuram Rajan, the former Reserve Bank of India governor. Dr. Rajan, thank you very much for your patience. Now, to come to the Indian scene, do you think India will be overly influenced if there is indeed, 3 Fed rate cuts in 2024? JP Morgan even believes it could be 5. I think so does Citi. So if there are an outsized number of cuts, do you think the Indian Reserve Bank can duck despite it saying that it will be guided by domestic issues?
Look, I think India is a continental economy in the sense that much of what goes on is not directly influenced by trade. It's not a small open economy now. It's a big, continent-sized economy. And so the external sector plays some role, but not the most important role. So I think it's appropriate for the Reserve Bank to be focused on more domestic conditions. It helps that, from the perspective of interest rates, Indian interest rates will look much more, healthy relative to foreign interest rates if the Fed has started cutting significantly. And that, of course, given global interest rates play a role, will give the Reserve Bank room. But it'll have to make that decision based on how it sees inflationary conditions within India.
Okay, I'm coming to that, but I just wanted to tell you that last week on Independence Day, I spoke to Dr. Rajan, and we were speaking about how he gave the Reserve Bank more elbow room in 1991, took a marketization of the exchange rate. And he said that the true independence of the Reserve Bank and monetary policy came in 2016, when we put in the inflation targeting framework. He said, neither the finance minister nor the governor can decide what the rates are because it will be decided by the committee and it will be guided by the inflation numbers. You've watched it for 2 sets of external committees. The latest one finishes its term this month. Are you happy with the way it's worked out? Do you think we've done well on inflation?
Well, I'm biased, right? I negotiated the inflation targeting regime and put that in place, and it started with my successor. I think it was a reform which was much due in India because it gave the markets, it gave ordinary people a sense of what the Reserve Bank was trying to do. And that commitment to keeping inflation within the band, which we arrived at before inflation targeting set out, so that we didn't have to subject the regime to uncertainty about whether it would be able to achieve the band. It started within the band, and that was good. I think the idea was that that would allow India to actually be more flexible in times of difficulty. And I think that has proven right that during the pandemic, for example, when tight policy was not appropriate, I think it gave the Reserve Bank the leg room or the elbow room to keep rates relatively mild, keep liquidity conditions relatively mild, so that we could weather the conditions in the pandemic a little better. Now, if there was no certainty that the Reserve Bank would be bringing in, going back within to the center of the band, then perhaps there would have been more pressure both on the on inflation, but also on the exchange rate. So I think it's worked well. I think you would see, and I think there have been studies on this, that inflation has been much less volatile than in before we instilled the regime. Of course, there are other factors responsible also. But during the Great Moderation in the rest of the world, India still had relatively volatile inflation. So the fact that we've kept it within the band for the most part during this period, I think is good for the Indian citizen, good for the Indian consumer, and good for Indian business.
Let me get back to the budget. The budget had a very refreshing focus on employment. Do you think that was a scheme whose time has come? Did you take a look at those schemes?
I did. I think that it certainly is a consequence of an election where jobs was a huge issue and had been dismissed for long by the government, pointing to unemployment statistics which are unreal. I think we should wake up to the fact that employment is a serious issue. Just read the newspapers and you see that that it's a huge problem. Forget the bad data we have. I think almost surely this points also to the fact we need much better data. Monthly unemployment numbers should be produced by the government so that we have a good sense of where it is. Otherwise, you have policy making in the blind. But given that, I think this is a timely recognition. The key question is it enough? Is it too little? And that the proof of the pudding is in seeing how these work out. We need constant monitoring of whether, in fact, they're producing the jobs. Too much of Indian policy is, you fire and you forget. You have a scheme and you don't see how it's doing, and you say we had this scheme and it touched so many, crore people, but did it actually do what it was supposed to do?
Yeah.
And so, what I would love to see is each of these schemes has a monitoring process associated. Today we have the data to see, who gets into jobs.
Yeah.
We can track them. How long do they stay in jobs? How much more salary did they make? And of course, we don't need to publicize this, eliminate data privacy, but the government can publicize aggregate figures. And for this, we need independent agencies which will do this and therefore not be subject to, accusations of bias. I think each of these schemes is worthwhile to monitor. Is it too little? Should we increase the quantum? Should we increase the kind of resources the government is putting into these schemes? So 3,000 towards pension sounds like, small amount of money. And will companies react, if that is the offer the government is making? Or does it have to be a different kind of scheme? So I would love to see, both these schemes implemented, but also constant monitoring to see if they work, and more if they don't.
Yeah. Actually, we don't know because the fine print, the details aren't out. But actually, Dr. Rangarajan put it very well. He said, jobless growth is bad, but jobs without growth is also not sustainable. So finally, a growth question. We have managed, I think this year's guidance from the Reserve Bank is 7.2. Even if we make it to 7, it's a damn good number given the context. Do you think you're confident about the growth? And yet there is this core inflation which is going below 3%, which seems to give some doubts about whether the growth is good enough. Your thoughts finally.
Well, I would not focus too much on what those growth numbers are. It's important they look healthy, but I would look at the quality of that growth, and that is why the jobs issue becomes really important. We've had a very capital-intensive growth in our manufacturing sector. If you look at the segments of the IIP that are doing particularly well, they're typically the more capital-intensive segments, and the labor-intensive segments are not. And we have to ask why this is the case, especially if, as we talked about in the early part of the program, we are getting the China +1 flows. Why is it that they're not creating many more textile jobs, many more leather jobs? What is it that we need to get that joblessness dealt with? And so I would focus much, much more on growth quality, but also I would focus on creating the foundations for strong, sustainable growth in the future, which means much more investment in education, skill building, healthcare, so that our human capital is ready for anything, no matter what happens in the globe, whether it creates, new opportunities in manufacturing trade or new opportunities in service trade. We have to be much more flexible given the uncertainties in the global economy, and that requires investment in our people. I would like to see much more of that, which will help us grow in a much more high quality way.
Okay, well, there are programs on skilling, but we are out of time in terms of discussing that. And of course, even the fine print isn't out. That gives us a reason to invite you yet again, Dr. Rajan. Thank you very much for sparing time for us today.
Thank you.
Well, that's it on this special edition of Indianomics. Thanks much for watching.